Hello and welcome to the most important interview for the economy. I have with me Governor, Reserve Bank of India, Mr. Das. Mr. Das, thank you very much indeed for giving us time. Really grateful for this. Now, everyone, every viewer, and today the viewership is like really teeming, would want to know about interest rate cuts. Please don't tell me aligned to the target, inflation aligned to the target. We heard that. After that, we've had, Powell saying that we cannot keep rates too high. We had an ECB cut. And much more important, domestic core inflation has come below 3%. So what would you guide?
You see, I'll be very forthright. I'll be very straightforward. First of all, good afternoon and namaskar to all your viewers. I'll be very forthright. In fact, it has made my endeavor and effort throughout to be as forthright as possible, and not to sort of try and camouflage the real issues by giving some, some generalized kind of reply. Now, when you talk of interest rate cut, now, of course, everybody always, at any point of time, everybody talks about interest rate cut. There is another whole lot of people who are the depositors, the silent depositors, who are, who would be affected in a different direction. Now, that is one aspect. Now, when the inflation is at 4, our inflation, the last print was 4.7%. And the June inflation is expected to be, out tomorrow. That is also expected to be, as per the surveys done by various wire services, that is likely to be close to 5%. So when we are at 5 and our target is 4, I would feel it is too premature to talk about interest rate cuts. Now, some central banks do some kind of advance guidance saying that, it is not far away, or, we are getting close, something like that.
That was my ask.
Yeah, but the issue is the overall economic environment globally, not just in India, globally and in India, it is so uncertain to talk in terms of interest rate cut that I will do it, 1 quarter away or 2 quarters away. You say something and then you have to sort of take back whatever you have said today. So basically it is the uncertainty which is the one aspect. Second thing is the CPI headline inflation continues to be close to 5%. In fact, as I said, according to the surveys done, it's likely to be again expected to be close to 5%. So therefore, from that context, I think it is too early to talk about interest rate cuts. And I would rather not give, any kind of forward guidance, which may, I said it, I think somewhere else. I would not like to give any kind of forward guidance which would lead the market players and the stakeholders and others to board the wrong train.
Okay. Now, I'll look at it this way. See, there were 2 MPC members who spoke about the neutral rate. Now, just a word to our viewers, the Reserve Bank and all central banks look at the difference between the interest rate, repo rate, minus inflation. That gives the real rate. Now, the real rate at the moment is 200 basis points. If you look at your 1 year ahead inflation forecast, 4.5, we are at 6.5. Now, what is the neutral real rate according to you? We thought we will get it in the bulletin. The MPC members think it should be 100 basis points. What do you think?
You see, with regard to neutral rate, let me use the word neutral because that is much more accurate. The neutral rate, first of all, as you know, RBI a few years ago, our research teams had done a study according to which the neutral rate was about 1.6 to 1.8%. Then immediately in the aftermath of the COVID, somewhere in 2021, our research teams in the Reserve Bank, they came out with a number which was 0.9 to 1%. Let's take it as 0.9 or 1%. Now again, our research teams are working. What is the, what is possibly a neutral rate? The main issue with neutral rate is that it all depends on which period you are looking at. Now, and neutral rate also is subject to so many structural changes which, which happen in the economy. Now, let us say in between we had the COVID pandemic. So that had a structural impact on the economy and had an impact on the neutral rate. So neutral rate came down to 1%. The other uncertainty is that neutral rate also depends on what is the potential growth you are assuming, because that is a very important determinant of the neutral rate. So it is whether your inflation is at target and whether your growth is at potential growth level. That is basically the place where your rates are neutral. Now, so therefore, it is subject to so many uncertainties. It is subject to so many structural changes. We did one analysis immediately after the COVID. Now the next analysis is being done. I think it should be over in the next couple of months or so. Once that is out, once that is completed, we will release the number. Now coming specifically, if I can, answer your other part of your question. Now coming to, this monetary policy decision, etc.
They are saying 1%.
Yeah. You see, at the end of the day, neutral rate is subject to so many uncertainties. It is also a theoretical construct.
Yes.
Policy making in the real life, policy making in the real world has to be driven not by a theoretical construct, an abstract theoretical construct, if I can put it that way, but has to be guided by the actual numbers. And what are the actual numbers? The actual numbers here are inflation at whether we are at 4%, and growth where we are. Today, inflation is at 5%. Headline inflation is at 5%. We have projected a growth of 7.2%. We are still quite a distance away from our target with regard to inflation. Growth is holding, is holding quite well, and growth is 7.2%. So therefore, you have to make, policy making is being made in the real world, and you have to go by observable numbers, not by a theoretical construct.
But would you say the economy is growing faster than potential, or is it growing at potential at this point in time?
You see, economy, when you talk about potential growth, I mean, this question also comes up, that is, what is India's potential growth? I think with regard to growth, what is important is not to look at the number per se, but to look at the direction of growth. I have said elsewhere, and it is just, I have quoted the facts, it's not as if I am saying anything new. The last 3 years GDP growth is an average of about 8.3%. For current year 24-25, we have given a projection of 7.2%. And there are many drivers of our growth which are playing out their role. The momentum of economic activity, the momentum of growth in the Q4 of last financial year, that is January to March, was very strong. And the momentum of economic activity in the in the quarter ending June, that is the first quarter of this year, also continues to be strong. So given this, I think 7.2% which we have given at this point of time, it looks very much achievable. And again, if you look at the growth from demand side or supply side, now supply side would be basically how your industry is doing, how your agriculture is doing, how services are doing. In demand side, if you look at, let us say, how consumption is doing, the private consumption, public consumption, or rural and urban consumption, you look at investment, you look at your net.
That is running weak, no sir?
Sorry?
Consumption is running a little
Consumption,
weak.
let me tell you, okay, since you are asking me, let me put it this way. So far as the supply side is concerned, agriculture is expected to do well in the current year, good monsoon, and the season is looking good. Agriculture is expected to do well for the current year. So far as industries is concerned, the manufacturing sector is doing very well. The IIP numbers are very much in the expansion zone for a very, for considerable period of time, for past so many months. The latest IIP numbers are also, not IIP, I'm sorry, the PMI numbers. I'm sorry, I mean the PMI numbers. The manufacturing PMI as well as the services PMI have, again, they are remaining, they are higher than what it was in the previous month. And services is doing very well from the supply side. In fact, our service exports have also gone up strongly. Overall, service sector activity at the moment is very strong. Now, coming to the demand side, you asked about consumption. Urban consumption has been quite strong for quite some time, and it is remaining stable. Rural consumption, which was lagging behind, has picked up. In fact, it was out there in the media that the FMCG sales, rural FMCG sales have picked up. And given the fact that we have an expectation of a good monsoon, and incidentally the NREGA demand has also fallen, and considering that we are expecting a good monsoon, and the monsoon is now very much active in many parts of the country, the rural purchasing power, thanks to a good agriculture, will also go up. So urban demand is holding stable, rural demand is picking up and is likely to improve. The third component on the demand side, as you would know, is the net exports. Our exports have picked up.
Yes.
Services exports are very strong. So if you put all these things together, I think what we are looking at is that India is on a trajectory of higher growth. And I said it elsewhere that I think there is a structural momentum to our growth drivers, and we are moving towards 8% growth. What I have said is that we are moving towards that.
Yeah.
So therefore, I am quite sanguine about India's growth. Coming specifically to the potential growth rate, on potential growth rate, I would like to say it is the direction of growth, which is important, not the exact number, whether it is 7.2 or 7.5 or 7.7.
No, the 3-year average looks good also because the previous was a contraction. So you got 9.7 and therefore the average is high. I took a 10-year average, it comes to 6%. I took a 20-year average, annual is 6.5%. Do you feel in the next 3 years or so, we will be substantially higher than that?
You see, when you look at time horizons, you said 10-year period and 20-year period. In the last 10 years, there were structural breaks.
Yes.
Like COVID pandemic was a major structural break. If you take into account the last 20 years, you had some structural drivers by way of, let us say, reforms like GST, IBC, monetary policy framework, introduction of the MPC framework and all that. So that was a kind of a structurally, they were positive, but structurally negative where the COVID and the commencement of the war in Ukraine, then sudden squeeze in external sector demand and all that. But now we are getting out of it. So therefore, I think, again, a 10-year average and a 20-year average, you have to discount out these kind of structural idiosyncrasies or impacts, and then look at the growth momentum. So far as our current scenario is concerned, let us say post-COVID also, I think the growth numbers are gradually, what do you call statistically, the base factors are also gradually evening out. They're gradually evening out. That's why you see current year 7.2%, not 8 point something.
But better than 6.5, you would say? I mean, since
certainly.
You expect in the next 3 years. Okay.
In fact, I would expect the, international agencies and others, I think some of the rating agencies have also revised their growth projections upwards. And some of the internal...
So more upgrades are likely.
More upgrades are likely. Even the international agencies also, which are expected to give their projections in the next maybe few weeks or months. Let us watch what they are saying. But I see clearly the upward, growth is on the upward trajectory.